Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. Hope everybody's having an absolutely great day. It is Friday. Welcome everyone to the Daily Market Commentary. I'm your host, Chuck Fulkerson. We've been out for a couple of days in the Daily Market Commentary. I had a live trading room yesterday with Traders Army subscribers, and so we've been out for a couple of days, so a couple things to catch up on. But this week we had a pretty strong bearish week. However, if you listen to the program on a daily basis, it should not have taken you by surprise. Matter of fact, it should have been something that we saw coming, and there were some pretty nice breakout opportunities in taking it. So, now that we've had this strong move down, what are we looking for today? So let's go ahead and dive right in. Starting on the ES. Now I'm going to begin with the ES. It's the big picture market. Yesterday, there was this little wick over wick level that we got a nice reversal out of, and this actually met entry right as we were in our live trading session, just as the live trading session ended, and gave us a move down to this area down here. Now, this 2694 by 2728, really, really wide level. Well, that wide level was the level found on the daily chart. We actually hit the area, the fair price value area, that potential buying area on the daily chart, and then got a little bit of a bounce off of it. Do I think that means that we've hit a bottom? Not necessarily. Something more tells me that the rally we've seen in the overnight hours is essentially a short covering rally. As we're seeing the European markets and the Asian markets wind down for the week, I think that we're seeing a short covering rally. And I think we'll see the same thing here in the US. I think early in the day today, we'll see a short covering rally. But then my crystal ball tells me that we'll have a pretty big sell-off by the end of the day. I could be wrong on that, but whenever we saw earlier this year, whenever we were seeing more weakness in the markets, throughout this period here, we were having significant sell-offs at the end of the day on Fridays. It was very consistent that there were sell-offs at the end of the day on Fridays. And, we take a look at this big green candle here on February the 6th from earlier this year, and we see that after two essential, call those blow-off days, right? The market the top just blew off the market and strong move down. Matter of fact, I'm pretty sure that at one point, this red candle here was our single biggest drop in the history of the Dow Jones in a point value, right? It was over 1,000 points, I think, that day. Well, look at the very next day. We continued to have a bloodbath, and then we rallied up. Well, that rally up was the short covering rally. This was the short covering rally day. And then a few more shorts came in. And then, this is really where we saw the shakeout occur. And the shakeout occurred by those two lows close to one another. I think that we're still going to get another shakeout down here. I feel like that, when you have these huge blow-off days like we had earlier this week, yesterday was still a pretty big blow-off day, not quite as big as the rest, but we saw a pretty strong downward move at one point, which, the futures then rallied back up a little bit later, and overnight we're up about almost 1% in the S&P. So what do I see us doing for today? Well, let's move to this hourly chart. I think that there's a chance that we'll continue to rally throughout the day. Now, this level here, we're going to have to remove. There's some areas up in here where I think you could see a bit of a reversal. So I'm right now going to take this obvious one, right, which is the origin of this very strong move down. I'm going to take this obvious level in here. There's a few more on the smaller time frame kind of as we come up through here. But for right now, I'm going to pick this super obvious one, a little bit of sideways, very strong downward move. This was our fair price value area. It's also up, right here near whole round numbers, 2,900, 2,880 in that range. 2,800 is kind of where we reversed yesterday. You saw us hit that 2,800 number and then boom, sell off pretty hard. But I still think that we're going to retest these lows. So that we could get a rally early in the day, and it could be a strong rally early in the day. But I still overall think that we're going to continue this downward move. And the reason is that my bigger picture, which is my 4-hour chart, we've got lower swing lows and lower swing highs. I'm really not willing yet to be a buyer until I get a higher swing high on the 4-hour chart. Higher swing high and a higher swing low. I kind of need both because that's really the definition of trend. When I slide over to the NASDAQ, we've got some very similar areas here to look at. Now, the NASDAQ is significantly stronger in the pre-market than the S&P. Also, the NASDAQ yesterday did not have as big of a blow off to the downside. So yesterday in the live trading room, we actually were setting up a bear flag yesterday in the NASDAQ, where we had this move down followed by this little bear flag. And as we were looking at the trades yesterday, I said, I think there's a chance to get short just below this area. And this was a false breakout, right? I mean, it still moved for, 40 from 69.40 down to 69. I mean, it still moved for, 30 points. So if you took the false breakout, you still picked up about 30 points on it. The problem is that your stop had to be way up here, right? Your stop had to be way up here, and so it may not have been a trade that gave you enough reward to risk to make it worthwhile, or even enough reward. So that one we missed on the breakdown because of that demand in the S&P. Now, we saw some strength yesterday in some of the FANG stocks, and that's really what helped to kind of lead this back up. A lot of investors saw some value in some of those NASDAQ stocks and were able to pick them up. So the NASDAQ didn't have as big of a down day yesterday as the other markets. It was still down, but not anywhere near as much as the rest. So those are our two main equity markets. The Russell and the Dow Jones also do still have some opportunities in them as well. Looking now at crude oil. So crude oil yesterday, this is a level that we've had in crude, identified, set up for a while. Got a really nice rally off the crude oil trade. So if you were able to catch that crude oil trade, now I can't leave this on here any longer because we traded to the bottom of it, moved up nicely. But look at the origin of this move. The origin of this move included a gap, right? So we came back down, we closed the gap. Now, if all you did was trade the gap fill, there's a chance you got stopped out. What I was looking at was the little bit of fair price value area below the gap, the area that included the gap. And that's really where we got a rally up out of here. Now, this came to its opposing fair price value area for a first profit target. If you're in it, take some money off the table, move your stop up probably to underneath this area right here. Still have an area for potential reversal up above us at 73.04 by 73.62. Gold, I thought we we may get a chance yesterday for a pullback into this 1200 range. I'm going to leave this area here on the charts. I think this could be a decent little reversal point if indeed we come back into there. When I look at gold on a 4-hour chart, we have finally broken through that 4-hour resistance point that it's just been banging its head off of for weeks. And so maybe now we can get it. You can have a chance at gold really showing some strength. There could be some areas of reversal in here as well, but we've got that little hourly level a bit lower. Looking at bonds and currency markets. So bonds, we saw a rally in the bonds over the last couple of days. No surprise there, as we're seeing people move money into different locations in different areas. And so I'm going to leave bonds as is. We still have some areas of selling opportunity up above us, but notice that they're both confirmation style entries. In the Aussie, we have a potential breakdown set up, and that breakdown we've been waiting on. Thought I was going to get it earlier this week. It didn't quite come to fruition, but actually that strengthens my resolve, if you will, on the breakdown. And when I look at the Aussie today, I see that we've got this little area here just above us. So we're setting up for a potential breakdown, or excuse me, a breakout to the upside. But if you notice, we keep having those high upper wicks, right? Upper wick, upper wick, upper wick, upper wick, upper wick, upper. All those upper wicks tell me that the sellers keep trying to drive it up. The buyers keep trying to drive it up, and the sellers keep knocking it down. So I'm not sure if it's going to be able to get through there. And even if I do, I don't know if I have enough room to roam. So if you're going to take a breakout on this, which I think it sets up for a breakout long, just mind your stops carefully and understand your rules. The euro. The euro yesterday, I didn't really add anything to it. I was yesterday looking at this brilliantly designed channel. It's almost like somebody drew those lines there to make them bounce off of it. But I didn't anticipate, us getting another bounce off of it unless that corresponded with this area here. So we could get a little bounce off of this area here. So keep an eye on this. This is a good opportunity for candle-to-candle style trading on a bit of a pullback. And then our Canadian dollar. So in the Canadian dollar, We've got a reversal area up above us. We're almost to that level now. Hasn't quite gotten there yet, so we'll kind of keep that in play. Great British Pound, Japanese Yen. So in the Great British Pound yesterday, we had a confirmation style entry. So some of you were able to jump in on that confirmation style entry as it did meet entry right here. You get short as it comes out of the level, and then now it's kind of come back up into the level, and it's chopping around. You need to adjust your risk accordingly based upon your risk tolerances. My rule is if I get into a trade and it doesn't make its move in about 5 or 6 candles, I'm really looking to get out of that position. It hasn't made the move I expected it to make, and so I don't think I'm quite as interested in this trade now. Now, if you, it's by the way, it still hasn't stopped anybody out. If you've not gotten into it and you still think that it could come down, I think now it converts to a breakdown trade. And you take the breakdown below this area right here. So what I'm going to do is remove these lines here. And our British pound trade is still valid, but if you want to take the breakdown, it would be the breakdown below this area here. Now, I don't have as much room to roam as I would like with this area there, but since we've tested that area a couple of times, I think that that we could go down all the way into this 3112 area. Japanese yen. So Japanese yen, we hit our reversal point, price moved down. We came back in and touched it again, price moved down. So this level has pretty much been exhausted. It worked out pretty well, both trades, but I think that level itself has been exhausted. So if you're still in the trade, move your stop accordingly, lock in some profits. We could get a little bit of a reversal right in here, so just keep an eye on this area at some point today for the yen. All right. This is what I'm looking at for the weekend. I will tell you, me personally, I don't think I'm holding anything over the weekend. After a tough week of market movement like this, holding things over the weekend to me just seems like a little bit more risky than I'm willing to take, and so I'm not going to hold things over the weekend heading into this week. Remember, October 21st to 26th, you can go to tradersarmy.com, become a free subscriber, and get access to the live trading rooms for a week so that you can preview what it is that we do inside those live trading rooms every day. We typically do those live trading rooms on Sunday evenings to set up for the week, and on Thursday mornings. We're actually adding a Tuesday morning session that week because since we're letting everybody else in for free that week, we want to make sure that the subscribers get a little bit extra. So just go to tradersarmy.com and click this subscribe button right here and sign up for the free subscription, and you will get the email about how to join that week. So, all right, everybody, I hope you guys all have an absolutely great trading week, and I will see you on the flip side. Have a great week. See you next week. Bye-bye.